Welcome to Subramani. This time is different, right? Sir John Templeton said that this is a reaction which we have to any new change which happens, and saying it has never happened before and this time is different, right? So, or we say, oh, now the market is on a permanent high and this time is different. Just as dangerous as this time is different, this time is not different is also dangerous. That's what Jason Zweig says. So both are right. This time is different is also right, and this time it's not different is also right, or both are wrong. You can't say always this time is different is wrong. So what has really happened is Donald Trump has really set the cat among the pigeons, and he has created a situation which none of us know how to react, right? So what should one do at this stage? Now go back 5 years, go to March 2020, right? Approximately 5 years. We are in April now. We were hit by COVID. We had no clue what to do. So people reacted three ways how they could. One, stop investing, that stop your SIP. Second, withdraw all the money that you have in equity and put it into debt instruments. Believe me, people did it. And third, invest more, right? All the three options were right or wrong depending on your mental makeup and what you thought is going to happen in the future. So all of us thought whatever we thought. I mean, I invested more because for me this was perhaps the fifth time that the market has fallen big way since I started investing in 1979. But I was also speaking to my homeopathy doctor, and he said something very basic, and he has said this even during the swine flu time. The only thing you can really do is increase your own immunity, right? So you get stronger, you eat sensibly, and you live a good life. That's it. Don't go out, don't mix with people, right? So the government also said that was wrong. That's the only thing you could do. So what am I saying? You have to increase your immunity. Now what should you do in situations like this? You will be surrounded by people who tell you this is the end of the world as we knew it, or as we know it, right? So people will come and tell you that just sell off everything. Where we remove the tariffs, the Chinese market, Chinese products will flood Indian markets, and you will have only Chinese cars selling. No Indian cars will sell. So therefore, Maruti deserves a PE of 5, Tata Motors deserves a PE of 4, or things like that. You will hear all that. You will also hear that many Indian companies won't be able to survive. Indian pharma companies will not be able to export to the US, right? Indian tech companies are now going to be hit very badly because of tariffs. Let's face it. Yes, it is a different situation, and there are 3-4 things which you can do exactly like during COVID times. One, you could stop investing. Right, say, so stop all your SIPs, saying there is too much uncertainty, I will not invest. You could remove money from funds which have already fallen, maybe whatever mutual funds you have put or shares that you have bought, which have, you could sell what has gone up, saying, oh my God, now that will be the turn of these companies to fall if you are in individual companies or in funds, and then put it into some maybe debt funds, right, which will perhaps fluctuate less. But remember, Trump's moves could also cause inflation in US, which means interest rates could go up. If interest rates go up in US, interest rates will go up in India. So if interest rates go up, your portfolio will lose value, right? So that could also happen in debt funds. You could go into an international index fund, saying I will put all my money in an international index fund, so whatever happens to the world will happen to me. But remember, international index funds could also have 40-50% in the US. So do you want to take such a high exposure to US? It's your call. So basically, like I said, you have got to improve your immunity. So you decide what you want to do. You look at your portfolio and say, well, I require money after 5 years, 7 years, 10 years, 20 years, whatever. So I don't have to worry about the value of my portfolio on a day-to-day basis. Whatever money I require for my needs, for my daily needs, I'm earning. I've got dividends, I've got interest, I've got rent, whatever, and therefore I don't have to bother about the value of my portfolio on a regular basis, and I will leave it to the fund manager to do whatever he thinks is right. This is assuming that the fund manager knows what to do. What if the fund manager were to turn to you and ask, now what should I do with my international exposure? Honestly, I don't have an answer. Do I have money in US markets? Yes, I have money in US markets. Do I have money in other international markets? Yes, I have a fund which decides, where the fund manager decides whether to put in China, Taiwan, Korea, Japan, wherever, and US, of course. So the fund manager decides. Will the fund manager be right? Will the fund manager be wrong? I honestly don't know. I play both the games. I invest, and I also let my fund manager invest, and I look once in a while at what my fund manager is doing, and I say, oh, this is a different approach. I'm not getting into right or wrong, because with 40-50 years of investing, you realize there's nothing right or wrong. You could be right, you could be wrong, you could make money when you're right, you could lose a lot of money when you're wrong, and you could make a lot of money when you think you're wrong, but you're still paying contrarian and you make money. Or you invest in fund managers who think contrary to what you are doing, and still you make money in those funds. So any of those things could happen. So we also have to understand that you must think very clearly as investors, but also realize that many investors, many economic policy advisors, many analysts, and many fund managers are themselves an emotional mess, and they themselves do not know now what is to be done. So intense uncertainty is guaranteed. Does not mean you should be intense action is not necessary. Do intense emotional thinking, all that is fine, but you may not need to do anything. But having said that, maybe you take some cash out, you maybe do some tax loss harvesting, right? So sell off shares in your portfolio, buy the same shares in your wife's portfolio. You have reduced you have used MTM to book some losses, right? So you have done tax loss harvesting. You could do that. Trying to predict what the market will do next is on an assumption that you know what is the implication of what Trump has done. You know that Trump will just stick to this and not make changes, and you're trying to read Trump's mind and the market. Believe me, it's impossible. It's almost impossible to do that. So when you can't do all that, why get into this huge thing of saying, I know what is going to come next? I don't know. Actually, I don't know. But will BYD cars flood Indian market and Maruti and Tata Motors vanish? No, I've heard this story so many times. I heard Patanjali Dant Kanti has come, and so that is going to be the end of Colgate. That didn't happen. Maybe these people, maybe Patanjali sells 1 million pieces, maybe 2 million pieces of toothpaste. Yes, that is going to hit, but is it going to hit Colgate so hard that Colgate's PE changes and Colgate goes for a toss? No, that does not happen. Major changes don't happen. Yes, major activity will happen. You will think what to do 10 times. All that everything will happen, but does not mean that you are going to make any big changes in your portfolio. So if you let us go to the simple case of your COVID. If all you did was improve your immunity, did exercise, and ate properly, ate clean, you would have only improved your resistance. So similarly, you have been investing in an index fund, you have been investing in some other funds, you have been investing in some multi-asset funds. So you have gold, you have debt, you have equity in your portfolio, you have an international fund. So you have a reasonably well diversified portfolio. You are also very clear sorry, that when markets are so uncertain, you will not withdraw. Forget investing, you will not withdraw. These two will help. Second, people with little more guts say, okay, I will not stop my SIP, but I will let my SIP continue, but I will not invest more. I'm done with the volatility. I can't handle volatility. That is second response. Third response is to say, I know the market will recover. I know in the long run sanity will prevail. I know that in the long run Trump is a businessman and he will do something which is reasonable. And I know that Narendra Modi and Nirmala Sitharaman will act in a way which is good for the country. So I don't have to worry too much about the macros. Micros, I don't understand what's happening. So I just continue my SIP, or I put more and more money into an index fund, because index fund will recover the fastest, right? So I could do this. I could do any of these responses, and you could be right over the next 20 years. You could be disastrously wrong over the next 6 months. You could be terribly wrong over the next 2 years, but you could be great over the next 5 years or 10 years or 20 years. So what is your point of view? What are you going to, we are now in 2025, are you going to look at your portfolio in 2026? Do you need your money in 2026? Then the answer is different. If you need the money in 2046, let's say, then there is absolutely nothing for you to do. But the mind seeks some action, so you may want to say, oh, we'll do something about it. So I think the first step is to stop obsessing about the damage that has already happened. It has already happened. There is nothing to be done, and you'll have some analysts telling you, look, I told you you should go short in the market and all, but you're not the types, right? You're an investor, you're not a trader. So just look at those things on which you will have no regret. If I told you improve your immunity and just eat right, you couldn't have, there will be no regret doing that. So similarly, if you were just to be in your portfolio, you may not have too much regret because you didn't do anything. You can have a regret saying, oh, I should have done this, I should have done that, but no major regret will happen. You have not majorly shuffled your portfolio. You haven't, oh, I've sold China, I bought US, I sold US, I bought Europe. I think there's less turmoil in Europe, and do I also invested in South Africa or South America, whatever, right? So you can do that kind of a thing, or you can say, oh, I exited technology and pharma because there's too much uncertainty. I would rather invest in domestic consumption, which means you know that these tariffs are permanent and Donald Trump is not going to make changes, right? Now, we know none of that. We do not know whether these tariffs will remain. We do not know whether Trump will levy more tariffs, less tariffs. We do not know how the market will react. Let's say there is an automobile spare part manufacturer who is exporting to US. Currently, he is paying 10% tariff, right? He's 10% tariff. 10% has now become 25. Now, out of his total exports out of his total sales of 100, 40% is exports. Out of 40%, 20% is going to US, and there the tariff is going up by 15%. Honestly, the impact of that on the EPS and therefore the impact of that on the PE is almost impossible to calculate, right? So is the client going to say, oh, from tomorrow I'll not buy your components? He does not have too much of a choice, at least in the immediate short term. Next 2 quarters he has no choice. He has to continue with this spare part supplier, otherwise his truck is going to, or his vehicle is going to suffer. So in the total impact on the vehicle, this 10% increase in tariff of a small part, is it really going to be a killer? Is it going to be such a big killer that the EPS of this company is impacted and the PE is also impacted? Right now the PE is 12. How much lower can it come? Do you think this company is going to vanish? No. So therefore you buy more of the share, which is maybe an auto component, right? So any of these things you do is fine, but you have bought this auto component already and the price is down. Stop worrying too much about your portfolio. You can't really do much. Check with your tax advisor how tax harvesting works. And also worry now about the somewhat bigger decisions that you're taking, right? So somewhat like stopping your SIP. Will you have regrets? Maybe. Then the third one is major overall of your portfolio. That looks a little dicey because you don't know what to do. And you talk to a fund manager and he says, look, I also don't know what to do. Then your problem starts. Thank you.